Hello and welcome to Property Box News. I'm Simon Evison. Later, I'm looking at the latest house price index reports. But first, a tenant falling into arrears is a worry on the horizon for most landlords, and it's a subject we've looked at before. According to Rental Step, the tenant passport startup company, more and more tenants are falling into arrears as rents rise and wage growth remains sluggish. According to Your Move, from January to May this year, there were consecutive rises in the percentage of tenants in arrears, rising from 8.4% to 9.4%. Meanwhile, Belvoir also reported that a fifth of its offices had 4 to 10 tenants in arrears during the first 3 months of the year. This equates to somewhere in the region of £900 million annually. With the ban on tenant fees set to affect rental prices and the economy likely to stay largely the same, it's more important than ever to thoroughly vet your prospective tenants and carry out thorough reference checks. Rental Step has created a unique tenant passport. It contains the digital rental history profile of the tenant, which includes a tenant's rental history, employment details and references, and can be shared with landlords and letting agents. Rental Step, which allows landlords to list property on Rightmove, Zoopla and Prime Location for a fraction of the normal cost, has recorded landlord user growth of around 150% per month since the start of 2018 and expects to have over 5,000 tenants using its platform by the end of the year. Other ways you can carry out reference and credit checks is by joining one of the main landlord associations. Both NLA and RLA can help carry out the relevant checks as well. So it's been a while since we had a look at the latest house price index report, so here's a quick roundup. As usual, there are differences across the country, but overall the market is remaining pretty flat, with minimal growth in house prices. The annual change is around the 2% mark across the reports from Halifax, Nationwide and Your Move. East Midlands is the strongest performing region with an annual growth of 4.4% according to Nationwide, and for the fifth successive quarter, price growth in Northern England exceed that in Southern England, though most areas saw a slowing in annual price growth. Northern England saw 3.3% year-on-year increase, while in the south prices were up just 0.5%. Activity in May increased, with the Halifax reporting that there were 64,526 mortgage approvals for the month. This was a 2.5% month-on-month increase, ending the run of 3 consecutive monthly falls. Halifax report the average house price at £225,654. Nationwide has it at £215,444, and the outlook remains positive, with Russell Galley, Halifax General Manager, having this to say. At the halfway stage of the year, the annual rate is within our forecast range of 0 to 3% for 2018. We continue to see very positive factors of continuing low mortgage rates, great affordability levels and robust labour market. The continuing shortage of properties for sale should also continue to support price growth. So, if you are inclined to read the reports, follow the link in the description below. If we turn our attention now to the rental market, rents have been on a very slow increase for some time now, with the average cost of a new let up 0.7% to £956 per calendar month in June, down from 1.3% in May. The biggest annual growth in rent was in Wales, with a rise of 4.1%, followed by the east of England, up 2.3%. The Midlands is up 2.2%, the south up 1.9%, and Scotland up 1.1%. This data, in a new report by Hamptons International, also shows that more rented homes than before are owned by landlords incorporated as a company, suggesting they have reacted to tax changes. The number increased to 18% in the first half of 2018, the highest since Hamptons Index began in 2020, and up 4% compared to the first half of 2017. According to the data, the numbers have been steadily rising since the first half of 2015, which was when, of course, the Chancellor announced changes to tax relief on rental properties. The changes mean that it can be more efficient or more tax efficient in some cases for landlords to own their property in their buy-to-let portfolios through a company rather than hold as a personal asset. The number of rented homes owned by company landlords continues to rise, almost double the proportion in 2015, said Anisha Beveridge, analyst at Hamptons International. Rental growth slowed in June, falling below 1% for the first time in 7 months as the shortage in stock begins to level out. The lull in landlord purchasing activity following the stamp duty surcharge for second homes appears to have bottomed out as investors find new ways to make their returns. And finally, here's the top 10 of another buy-to-let Hotspot poll. Although some say this is more accurate than others because the compiler, Lend Invest, used 4 metrics to come up with their results, which are capital value growth, transaction volumes, rental yield, and rental price growth. So it gives a much more overall picture. And here it is, the top 10. Number 10 is Southend-on-Sea. 9, Ipswich. 8, West Country favourite, Bristol. 7, Northampton, with Cambridge close by at 6. 5 is Manchester. 4, Birmingham and Essex pals, Romford and Colchester at 3 and 2 respectively, with Luton reclaiming the top spot. The detailed report, you'll see a link in the description below. That's all from me. Don't forget to subscribe and share, and I'll see you next time. Goodbye. $2,200